Good morning, traders. Welcome back. It is Monday, April the 17th of 2023. Took a couple of weeks off out in California with my daughter and granddaughter. So we're back with a weekly trading preview, market analyses, and performance review. And we'll roll all of our performance review over the last 3 weeks into today's video. Interesting week coming into this week. We are still very bullish on the weekly technical analyses. Now, we break this down a little bit further again in our live trading room every day to look at not only the daily numbers, but 2-hour numbers. So obviously it's a little bit more defined, a little bit more precise on a daily basis. But for this video, we look at the weekly numbers and pretty much solidly across the board looking fairly bullish here. Not a lot of overstretched or overbought areas. Obviously stochastics, RSI a little bit showing overbought, but generally pretty strong bullish action here. We look at the marketplace though, and it tells a little bit of a different story. If you look at the E-minis here again, which is what we use for our technical analyses, you can see that we are basically at the top of a trading channel here. We're at the top of a trading channel that was really established back on April 24th. Now you say, well, April 24th, that's not that long ago. No, that was April 24th of 2022. It was a year ago that we have been in this basic trend of 4,200 on the top and what I like to call the cliff, this black bar down here of 3840. And we dipped all the way down to 3575 during that interim. So really, we're in this sort of trap zone, this chop zone, if you will, of 4,200 on the upside, 3840 on the downside, with the potential for some additional downside should we be able to break that cliff, break that 3840 level. But so far, it hasn't happened. And we've been looking for an expansion move for a really, really long time. There's no question that we've been bullish here for the last few weeks, but we really haven't gone anywhere relative to this box that we've been stuck in for a really, really long time. If we pull down a little bit closer to the 2-hour candles, which is what we do use inside of our trading room on a daily basis to set up our zero DTE trades, you'll notice again that there's been a lot of movement here, but if you go back to the April 4th period, we have been down a little bit, we've been up a little bit, but basically right where we're at right now has been a pretty big magnet area. I'll give you some of our levels that we're looking at for today. On the upside, it would be 4175 and then 4187 and then 4206. That 4206 number would be the big one. If the markets could break up above that 4206 number, might be able to see a little continuation of the bullish action. I'm looking at the futures right now. They're flat right now as all get out with about an hour to go before the cash markets open up. So that would be bullishness. If we're looking for bearish levels, if we're looking for support levels, 4148 would be a level for me today. Below that is 4138. And then below that is 4114. And then the big one that you're going to see down here that we've hit a couple of times is 4100. And that's really the big number to look at. If we could break below 4100, we might be able to get some downside action and a little bit of a retracement taking place. But that's what we're looking at for price action levels today in our live trading room. We look at key support resistance levels across the board of the major indices that we trade. You'll notice the red lines here. That's the 200-day moving average. We are firmly up above the 200-day moving average on pretty much all of our indices except for the Russell, except for the IWM. It's been pretty much flat for the last month or so of trading. But again, I think what that implies is that we've got a lot of room for retracement. Yeah, that's a pretty strong signal that 3 of the 4 major indices that we trade are up above the moving average, the 200-day moving average. But I think it also means when we look at reversion to the mean approaches, which is one of our favorite ways to set up trades, we probably have more downside then we have upside potential in the marketplace. We look at the year-to-date performance, and it is, again, the NASDAQ that is just soundly outperforming all of the other major indices. The Dow and the IWM, for all intents and purposes, basically flat here through this first quarter. The S&P's up solid, a solid 8% for this first quarter of the year. That's a pretty darn solid start to the year, but it is the Qs that are solidly outperforming. And again, for me, if you annualize this out, I don't think that the NASDAQ is going to end up this year, 2023, up 80%. I just don't see that happening. And so one of two things is going to probably take place here is we're going to have a little bit of a convergence between these major indices. You're either going to see these indices sort of rise to meet this, or you're going to see this sort of fall to meet that. And I think it is the latter rather than the former. I do think that the NASDAQ is going to come back down. We do have a bearish trade right now on the NASDAQ where ultimately over a 35-day period of time, we should have somewhere around the neighborhood of $2,500 to $3,000 at risk for a trade that could potentially make us $39,000 if we're right. So even if the trade doesn't work, it's great risk-reward ratio trade right now. Bearish setup on the NDX. We look at sector rotation, and this played out over the last week exactly as we thought and anticipated it would. We have set up in our short portfolio. We set up a position. Our live trading room, we set up a position, and in our asymmetric trade management investing asset allocation model, we set up a position. All designed to capture this bottoming that we're seeing in the financials. And that definitely played out exactly as we thought it would, or hoped it would at least, this past week. And it does look to be continuing this week as well, as we continue to have a lot of bank earnings coming in. We look at the heat map. We didn't do a video last week, so it's not 2 weeks of information. It's just last week's. Pretty much a mixed bag. You can see it's pretty much a mixed bag there. A little bit of everything with the financials, again, sort of kicking in and starting that little bit of a rebound that we're seeing in there. Again, we didn't do last week's video, so we just have this past week's to look at. Fairly solid week for the major indices. A lot of convergence there, and these are healthy weeks. These are weeks that you would like to see. We've had some weeks where the 5% or down 5%, as the case may be, in a 1 week period of time. That's not a healthy move. That's not a sustainable move. This is a pretty healthy bull market right here to take a look at it as it is. We look at the put-call ratio, and the put-call either as we start to get to a point where maybe we're running out a little bit of steam here. Gamma spots we're still looking around that 4,100 level, that 4,000 level, also very critical level for us. Here's the challenge, I think, that we're going to have this week. Last week was tough. It was tough to get really juicy setups in our zero DTE trades. It was really tough to get appropriate risk-reward ratios in our Theta Ferry setups. And that was with $75 of an expected move. This week, it's almost nothing. It's been a really, really, really long time since we have had an expected move this low. And that's going to directly affect our ability to use credit trades. We may have to dip into more of a debit trade setup as we were looking at a lot of our trades this week, because volatility is just not there. And if the volatility is not there, the premium's not there. And if the premium's not there, you're going to have a really bad risk-reward ratio if you are a net seller of options. We look at the fear, greed, sentiment reading, and we're still sort of pegged in that same area. Previous week, we were a little bit higher than this, but basically we were right in this range. But still in that greed area, I think we are a little overextended to the upside. This is a contrarian indicator, of course, and it applies that, when people are greedy, we should be fearful. When people are fearful, we should be greedy. I put out a video, by the way, today on some great analyses put out by Bank of America on economic readings. And I firmly believe everything that they say. We are of very similar minds in regard to what that data says. And basically what the data says is that if we're not already in a recession, we're headed into a recession. Now, that doesn't necessarily mean the market's going to crash, but it does mean that where everybody is greedy right now, we should start to be looking a little bit more fearful and set up our portfolios accordingly. We have some news items coming out this week. It's not a heavy news week, but we do have a lot of Fed speak. Fed Barkin speaks today. We got housing starts and more Fed speak on Tuesday. Oil inventory numbers. We have an oil trade that we work on every week, so that's an important number for us. The CPI out of the Eurozone's coming out on Wednesday, as well as more Fed speak. Thursday, we get jobless claims. We get nat gas. We're trading a nat gas trade right now, so that's an important number for us. Existing home sales can affect our ability to set up some real estate trades that we like to do from time to time. More Fed speak. The ECB and the Fed pretty much speaking all day long on Friday. So not a heavy news week, and I think that is part of the reason why we have a very, very low expected move this week. Not a lot of news catalysts on the table, so we'll have to see how that affects our ability to do scalping on Tuesday and Thursday of this week. If we look at our updated performance results, and again, this is throwing all three of our last weeks in there on our 0 DTEs. The big news, I guess, on our 0 DTEs is that even though we've had 79 days to trade them, we've done 126 trades. That's the big news. You know, if you're getting 4 or 5% return on a 0 DTE, but you can book that profit, take that exact same buying power, redeploy it once again into another 0 DTE and get another 4 or 5%. That technically is a 10% return on that capital for that day. You haven't utilized extra capital. And we've been able to have really, really good luck with that. I don't know if that's going to continue, at least for the foreseeable future with the low premium that we're working with. We've had good success with starting out the day with a 0 DTE with the SPX, booking a profit on that, getting our money going back out into the market and doing one on the NDX, which tends to hold its premium a little bit longer into the day. We'll see how that develops this week. I'm not optimistic, though, that it's going to be as easy as it has been. We did book a loser. We did book another loser over the last couple of weeks. So we're now up to 122 winners and 3 losers. We're still in one rolled position right now on the NDX. So we're still batting about 98%. Pretty darn happy with our results so far this year on the 0 DTEs. 4 DTE trades, we did not book a loss. We did some rolls, but we've done 32 of these as winners, 3 as losses, so 35 total trades. We are not in a roll right now as we speak on the 4 DTEs. Today's Monday, so we'll be initiating a new set of those here today. Our IWM Millionaire Maker trade just continues to roll. Cannot be happier with that trade. We were very, very close last year to almost a 50% annualized rate of return on the year. I think it was like 46, 47%. And I do believe that right now we're well on our way to being well above a 55% annualized rate of return on this trade. Just been an absolute solid trade. Look, when you have to go back years and years and years to find a losing trade, that's a pretty good trade. That's a pretty solid trade for us. Pairs trades, we were able to do 2 more pairs trades. And so we've done 15 total of those. 13 of them have been winners. We're still working 2 of the pairs trades. Haven't added any bear market strategy trades over the last couple of weeks. Waiting for the market to break a little bit here before we do that. Stock market millionaire, or the stock millionaire maker, year to date, we're working right now Netflix and we're working PayPal. And we did, 6 of those over the last 2 weeks. We adjusted each one of them out each week of those 3 weeks. So we have not had, knock on wood, we've not had a loser there with regards to either one of those as of yet. Very different risk-reward ratios on PayPal versus Netflix. The PayPal trade, very easy, straightforward so far this year. Hasn't been too much consternation with that. But it's also tracking for about a 4% a month ROI. Whereas the Netflix has been a tough one to stay on top of, and we've had to roll it quite a bit, adjust it quite a bit. but that's a trade that is averaging almost 10% a month. So you get a little give and take with both of those. They work well together. They combine well together. Our positive Vega DIA ladders, we added a couple, a couple of those. Every single one of our DIA ladders this year so far has been a winner. And that is a trade that has been averaging about 9% a month for us. So it's obviously been a really, really good trade setup for us. Scalping was tough this past week. Now, I will say to our credit, we did stop in both instances about halfway through the day. So we didn't scalp a full day, but still, I always tell everybody, people will say, man, I only made $100 scalping today. I'm saying, well, that's $100 more than somebody else that didn't scalp made. And that's what it's all about. So, we love scalping. It's something that I encourage everybody to hone their skills at and develop a skill set with. We do it every Tuesday and Thursday. We'd love to have you come join us in our live trading room. Dragonflies, we did another Dragonfly on BA, and that expired fully profitable. That has been a fabulous, fabulous trade for us this year. We were looking last week to reinitiate another Dragonfly on BA. And unfortunately, we had two whammies. We had the news come out on Friday that took the wind out of the sails of the stock, and we also have earnings coming up next week. So we're going to have to sort of belay that trade, wait for the fallout of the announcement from Friday, see what that does to the stock over the next few days, and then also wait for the earnings to come and go. And then we'll be right back at that trade. Theta Ferry trade. What can you say about a trade that has, again, there's no guarantees in life. There's no guarantees in trading. We never make any guarantees. But this is a trade that has historically put about 20 grand a year into our pocket overnight as we sleep. We're not doing anything with this trade. The trade is working its own magic overnight. That's why we call it the Theta Ferry. We've done 74 total trades this year with 73 winners, 1 loser. We did have a roll that we rolled for a really long time that we were finally able to exit at a very nice profit this past week. So no rolls right now on the Theta Ferry. Gold ladders. We've had some additions to the gold ladder trade, which has really boosted the income potential of the trade, and that has borne some good fruit over the last 2 weeks. We'll see how it goes for us this week, but we've done 24 trades. We've had to take a loss on one of the rolls, but that's been it so far, and we're also working our way down on expiration. So I think we're getting closer to the point on the gold ladder trades where we can actually start realizing some of the unrealized profit that we've been carrying on this trade all year long. Overnight vampire trade, got a new one coming up soon. So we'll be working on our 4th version of this fairly soon. That's been a fun trade for us. The oil ladders, we booked another loss, another losing ladder on the oil trade. So we're up to 22 total trades this year with 19 winners and 3 losers. But it is also the ladder that we trade that has the highest ROI potential. So I would imagine that this will probably continue to be a little bit more volatile, but boy, the earning potential on it has been great. We'll be working on that oil ladder a little bit more this week to add some more ladders back in. The in-the-money cover trades. These trades are amazing, and we've done 22 of them this year. All 22 of them have been winners so far. These trades, we've got 4 of these in-the-money cover trades working for us right now in our model portfolio. And they are APRing out at anywhere from 55% return for the year on the low end up to about 125% on the high end. So needless to say, these trades have been fantastic. We've absolutely loved them. Broken wing ladders, we did do a couple of these over the last couple of weeks that are not included in here because they were not standalone trades. They were part of our 0 DTE setups for the day. But I would imagine that we will probably be doing a lot more of these this week, at least, with the lowered premium that we're working with. Short portfolio continues to perform quite nicely. We do have a First Republic Bank position in there that has really boosted the ROI potential of that. But what a great time to be short things, and it's worked out well for us. The XSP Fly portfolio, we haven't done any of these over the last week or so because we've been rolling our zero DTEs, and the idea with these flies is that we're putting the profits from our zero DTEs in these so that we never ever risk any principal. Well, we're back now. We're finally back to where we should have some profits coming in from our zero DTEs that we can start throwing some more money at these flies. So looking forward to that as well. Our ATM program, our investing model, we call it the asymmetric trading method. That's more for investors than it is traders. It only takes 5 minutes a day to put your trade adjustments on. Just amazing. It's just amazing. If you have a investment account somewhere, I highly doubt that you're doing better than us over a long extended period of time. I know that just sounds so arrogant, but the numbers sort of speak for themselves. We have absolutely crushed the market. We have absolutely crushed most of the major hedge funds. We beat every single hedge fund in the world last year except for 2. And this year we are outperforming the market by a ton percentage-wise. S&P's up 8.3% year to date. That's fantastic. That is an awesome start to the market. We're up 14.2% with a lot less volatility. So, man, if you're an investor more than a trader, I would definitely recommend you check out our asymmetric trading method, that asset allocation model. If you do want to come join us in our live trading room and trade, 30 different plus trades a week with over 15 different strategies that we employ, come to the website tryzerodteforfree.com. You can trade with us live for 7 days. I think you're going to love it. We put you through 4 hours of training. I do a one-on-one consultation with you via Zoom. We make sure that your trading strategy is set up correctly to get started. And if you do your daily check-ins like we ask, and you follow the educational model that we lay out for you, and you come to the end of your first month and you're like, I don't think this is the most amazing trading room I've ever seen, I will give you double your money back, 200% no risk guarantee. We've never had anybody that's followed all of those things and been able to say that. So I think you will find that it is the highest value oriented trading room online today. So you can come check us out if you want to. Tryzerodteforfree.com. If you are more attuned to investing, you only want to spend 5 minutes a day managing your portfolio and you're looking for better returns and less volatility, you can go to tryastforfree.com and get a 2-week free trial there to see how our model portfolio works. Last but not least, if you do want to scalp with us on Tuesdays and Thursdays, you can go to tryscalpingnow.com. Our goal is to bring in about $500 to $1,000 a day each day that we are in the live trading room. So with that being said, guys, thanks once again. Appreciate all you guys for following along. Appreciate you guys on YouTube. I appreciate all of you that are in our live trading room right now and the contributions that you make to the group. I do believe, as Zig Ziglar says, you can get everything in life that you want if you'll just help enough other people get what they want. And I appreciate the support that you guys have given me. So with that being said, we'll see you guys in the live trading room. Take care, and I hope you have a good, positive week in trading.